Hey everyone, this is the Wealth Building Educator back again. And today I'm just going to do a brief video and speak about the formula for success. What are the two questions you need to ask yourself in order to prepare yourself to be financially independent at retirement? So question number one is, how much do you have to invest each month? After you do your budget and you pay your mandatory expenses and all of your bills, how much money do you have left over to invest on top of all of your particular retirement accounts? That's number one. That's the first question that you need to ask yourself. The second question you need to ask yourself is, when are you going to need the money? So I believe that a lot of time people really struggle with beginning to invest, and that's an issue. They don't know what to do. They don't know where to put their money. They don't know which brokerage company to invest with. Well, there are three brokerage companies that I believe will give you exactly what you need. And those are going to be in my order. And that's going to be Vanguard, Fidelity, and Charles Schwab. You also have companies like T. Rowe Price. You know, you got those brokerages like TD Ameritrade, E-Trade, whatever. But my top four actually would be Vanguard, Fidelity, Charles Schwab, and T. Rowe Price. Of course, Vanguard and Fidelity are the two that we invest most of our money in, and we're happy with our results so far. So if you are stuck on where to invest or how to invest, just ask yourself this particular question. How much can you afford to invest each month? And then ask yourself this next question: when are you going to need that money? See, a lot of time people get paralysis by the analysis and they overanalyze things when things could really be a little more simple than we tend to make them. And let me just say this. While we try to figure out where our money and where our investments should be going, remember, it's not necessarily important where you put your money. The investment vehicles or the brokerage companies, the most important thing is that you begin to invest as early as possible and as often as possible, and you be as consistent as possible, because that's going to ultimately get you to your goal. So if you have no idea what to do, where to go, let's suppose you have $1,000 and you want to just begin investing, and you have $500 a month that you'll be able to invest. You're 25 years old and you think you're going to need the money when you are 65 years old. So that's 40 years. It's 2022. You're looking at about 2060, 2065. So what you would do is go into a Vanguard Freedom retirement fund. And that's going to be around those years between 2060 and 2065. You could even go a little more aggressive if you want to. And if they have the 2070 fund out yet, you can look at something like that. So the beauty of one of these freedom funds or retirement 2060 funds is that it automatically adjusts your investments as you get closer to retirement age. Let me explain that to you. So if you start out now, if you are 25 years old and you have about 40 years until retirement, they'll be more heavy in the stocks up front and less heavy in the more secure investments, such as the bonds, or more stable investments, shall I say. So let's suppose you're looking at a Fidelity or Vanguard 2060 fund. You might have approximately 50 to 55% in the US stock market. Then you might have about 35% in the international stock market. And then you might have about 10% in bonds. And as you get closer to that 2060 date, it'll basically flip, because you want to be less risky, more conservative. And that's basically how those funds work. So ask yourself how much money you have each month, and ask yourself when you need that money. And then you can just automatically go into one of these target retirement funds. If you have any questions about that, you could feel free to leave any comments below, or you could just go and Google target retirement fund. The beauty about Fidelity is that you could start with a minimum of $25 a month. I prefer Vanguard. Unfortunately, with the Vanguard target retirement funds, you were looking at approximately $1,000 to start all of them. And to be honest, I recommend for most people to start with a target retirement fund with Vanguard because it's $1,000 as opposed to the $3,000 that it requires with VTSAX. As JL Collins mentioned, you can typically hold VTSAX 100% for the rest of your life. But if you want to be a little less volatile in the market, then that's where you kind of look at throwing in those bonds and throwing in a target retirement fund. Now, the downside to a target retirement fund is that usually the expense ratio will be a little higher than the expense ratio of a full-on VTSAX fund. VTSAX is approximately 0.04 as opposed to a target retirement fund, which may be about 0.12 or something in that ballpark. Now, when you're looking at the whole grand scheme of things, it's really not that much money. But of course, money does add up. But you have to just look at the overall stability that you're looking for. You need to look at your time horizon, how much you can invest each month. And that's really the formula. Throw as much money as you possibly can into the market as early as you can, as often as you can. Be consistent. And that's why the dead investors are usually more successful than investors that are trying to hop in and out of the market and people who are market timers. Get in, ride the wave. When the market dips, you'll buy more shares. When the market goes up, you'll buy less shares, but you will have the gains from when you bought them at the lower price point. So ultimately, get in there, stay in there, and you will be fine in the long run. Hey, I appreciate you for tuning into the video. If you have any questions, please feel free to leave them in the chat. Like, subscribe, and share the content. And I really appreciate all of the support you're giving. Thank you very much. Have a phenomenal day.